Okay, welcome back to the channel, everybody. Let's go ahead and talk about a secret ingredient. That secret ingredient, of course, is being able to zoom out and look at multiple time frames. But you don't have to look at every single time frame. You can just pick one or two or three. But the point is to zoom out, move your analysis to a larger time frame, and then eventually zoom in to be able to make better trading decisions based on healthy risk reward ratios. So here we have the SPX, which tracks the S&P 500, and what we're doing is we're looking at the 1 week level, right? The 1 week chart, and what we want to do is, 1 week is pretty good. I mean, you can zoom out more, but what we're trying to do here is we're just trying to find some key levels, right? So what we'll do is we'll just take our markers here and we'll say, okay, that's a key level, that's a key level. Oops, sorry. Let's see, that's a key level. That is a key level. And if you have any questions about how I'm deciding where these levels are, please feel free to use the channel to view other videos that I've discussed. But I will kind of share with you a review or a summary from those previous videos. As you can kind of see, what I'm doing is I'm finding levels where price reached, right? Here, here, here. These are all levels where buyers and sellers agreed that price reached and eventually either pivoted or continued, right? So you can kind of see all these levels. And then what we're going to do is we're going to narrow down to the 1 day, and we're just going to find those levels as well, right? So we're going to come in, we're going to find those days where price came down, hit a low, right? Any others that we kind of missed while we were doing the weekly review. So right here, here, here. So we're just taking these levels and we're just marking them. That's all we're doing. We're just saying, okay, these are areas that are indisputable where price reached and we should acknowledge. Okay? All right. So, and I just kind of went above and beyond. But basically, now if we narrow down to a 3 minute chart, let's take a quick look and see, did price action respect these levels? Looks like they did, right? So let's just go back a few days. You can see, okay, October 24th, for example, looks like market opens up, touches this level, comes right back down, breaks through this level, comes to the 37.43 level, and then looks like we have a pivot reverse, right? So good entry opportunity there. And your target would be, of course, that next level, right? Hits that next level, bounces back down, but it looks like it was trending up on the day, right? Look how clear and how efficient your trading can become when you understand what these levels are and you can trade off them, right, with good risk reward ratios. Now, you never really know, right? Is it going to go through this level? You honestly don't know. It could have bounced back. That's why you scale into these positions and take profits and then hold some of your shares or option calls or puts, whatever instrument you're trading, so that you can let your winners run. And as you can kind of see, in 3, 6, 9, 12, 15 minutes, this ran up to the next level and made a beautiful move, right? And then we can kind of go on. We can see other days. Here's October 26th. Looks like the market opened up, kind of bounced around for a few minutes, and then really respected this level. It just had a massive move, right? And then not only did it come up here, it came back down and retested eventually that original level where the market opened up at. So again, no matter which day we go, no matter which way we go, no matter which stock or ticker you choose, or index, or what have you, price will respect these previous levels because these are supply and demand imbalances where buyers and sellers are hiding. And this is where you create good price action with good risk reward. And especially if you're trading options, you need to be entering near a time where it's going to be making a move in order for you to even make any money, because it has to, of course, exceed that strike price that you selected. So if you have additional information, if you'd like to learn more about this type of trading, you notice my charts are pretty clean and simple. That's really how you become profitable. You don't need 20 indicators telling you what to do. You just need price action, you need volume, and you need these very important levels. Good luck, guys.